All right. Welcome, everyone. Enrique back in the saddle here this week for Top Trades. Good to see you.
You too. Happy to be home.
I got a list of fun stuff to talk about today. We have Liberation Day tomorrow. Not an April Fool's joke. I guess you can't do Liberation Day on April Fool's. No one will
But
believe you.
do you know that's actually why they think he did it April 2nd is because he didn't want to do it on April 1st.
Yeah.
So
Yeah,
yeah.
you can't do any tariffs as a joke. This is very serious. So it's happening tomorrow. We got the CNN Fear and Greed Index plumbing these lows down here at extreme fear this week, following the Friday dump, I guess. Newsmax IPO went bonkers to start the week. That's pretty interesting.
I didn't even realize it until this morning, and I was like, wait, what? What happened?
Yeah, I
Like,
know. It came out of
yeah,
nowhere, it felt like.
yeah.
Then we have the Drag 7, the Mag 7 underperformance,
The
which is
the
getting
the lag
into,
the lagnificent 7 is also
yeah,
one I
there you
heard.
go. That's a
So
tongue twister for you. We got Bitcoin attempting to perk up, but it hasn't looked great. Crypto's kind of still in the mud here. I also have some notes about gold and its amazing first quarter. We can maybe talk about that a little bit. And then torpedo bats. I figured we could talk a little bit about torpedo bats too. That's the news. That's important stuff as well.
everyone wants to hear us talk about baseball, of course. So
Well,
you know,
baseball's important. Yeah. So
yeah.
so there we go. So I'll just dive right into it, I guess. I'll share my screen right here and we can talk a little bit about fear and greed because I know that in our
Just so you
conversation.
know, what the reason I'm looking away, everyone, is I'm a couple things he said. I'm looking up stuff for the call, so this isn't me like returning emails or something.
Yeah,
Um,
we don't do a lot of prep for this call. We just we try to get, our free flowing conversation to you guys, and like that means looking stuff up on the fly, so we can
yeah,
talk about things in real time.
exactly.
But yeah, so we got here fear and greed, extreme fear, and this little timeline that I just figured out how to use. We're not down near those lows that we were early in March because we bounced a little bit, but we're getting back down in there. It seems like the herd is pretty spooked about Liberation Day, about tariffs, because I think there's still a little bit of uncertainty with those floating around. I think the last headline I read, and I'm trying my best to avoid them, but the last headline I read earlier this morning was that they're still being pretty cagey about
Yeah.
who's getting what. And so maybe that's a little bit of the nervousness that we're seeing in the markets again today. What are your thoughts on how this is playing out right now?
I mean, again, perspective of having done this for 30 years, and maybe not popular. And I'll deal with, do we sound like a broken record too? Uh, the market was always going to sell off after 2024, a year where we didn't even come close to touching the 200-day moving average. I've been going through numbers. It reminds me a lot of 2014, which was also a year where the market could do no wrong. And we saw a very similar move to what's happening right now in the middle of 2015 after that. Um, Tariffs are the excuse. There was always a big sell off coming. It was always going to be have some sort of symmetry to what happened before. Meaning, when you go, I'm literally looking here. We went through the 200-day moving average on November 2nd, 2023, and we didn't touch it again until March 7th. So that's 15 months above that. You don't take 15 months of above the moving 200-day moving average in the S&P 500 and resolve it all with a 2-week break. It's going to be 6 weeks, it's going to be 8, it's going to be 12, it's going to be 18. And so, I see everything that's happening. Everyone's like, this is so unique. I've never seen it. This has never happened. I'm like, yeah, it's happened every single time the market corrects after a move like that. It
Yeah.
just happens to be this time they're blaming it on Trump. Without a doubt, I'm saying what Trump's doing has never happened. But I got to tell you, every time these corrections come, it's something that's never happened. COVID had never happened. The 22 correction, which was post-COVID plus inflation, that combination had never happened. The mortgage crisis had never happened. It's always something, but the charts all look the same, and it's kind of like, I was thinking this. This is my stupid analogies. I apologize before I start. I love thinking about the markets like water dynamics. The oceans are all different all over the world. It rains in places all over the world that are very, very different. but the rain patterns ultimately are the same. The oceans ultimately react the same. It's kind of like the stock market to each individual situation. Ultimately, the patterns are the same. So, I just think we're going through a normal correction. A normal correction, by the way, really, really hurts. Like it should be painful. My last thing I'll say on Liberation Day, and I just did a recording with Daily Reckoning. We've got a long history of Trump's actions and their results. 40 years as a business person and 4 years in the last administration. I mean, in the last administration, I can't tell you how many times I heard someone, say to me, "Oh, he has a red button on his desk. He can launch all the nukes. We're all going to die." I mean, that was broadly a consensus for half of America. Yet, kind of the opposite happened. So, whether I agree with his methodology, I do think that the net result is not going to be so bad in terms of tariffs. I do think he's a rational actor, although an irrational talker. And that actually might be the best juxtaposition, right? Is look at his words versus his eventual actions, and there's a very big, I won't call it a cognitive dissonance, but a magnitude differential. So, look, I think that we're working our way through this. The last thing I'm going to add, I'm open-minded to, I'm open-minded to this is 2022 and we're beginning a correction. But as everyone knows, I've got a very strict methodology for that. If the 50 and 100 day go below the 200 day, we're now in a bear market and we retrench and we change. And people are going to begin to see, we're going to start doing some quality swaps in the Maverick, kind of getting rid of lower quality things that have lost us money and buying much higher quality stuff, whether it's made us money or not. Tomorrow's trade will be a big one where people see, they'll go, "Whoa, that is the best quality swap I've ever done probably in my entire career." But yeah, so I don't know. Tomorrow I think will be a big nothing burger. Is going to be my guess in terms of what happens and what he actually says. I just think it's not, I don't think it's going to be all that crazy. Regardless of what he says, actually, I don't think the market's going to do all that much.
Well, I think the market just wants to get over the hump. Like, let's just get the tariffs on the books. Like, you can only go down on the same news so many times here.
So I don't, the funny thing is, I don't know that that's actually going to happen tomorrow either. I feel like they have been in a process of putting together, look, I said this in the Daily Reckoning thing I recorded yesterday. We got 40 years of history with him, and he always does the same thing. 40 years of history as a business person and 4 years as president. He's going in a negotiation. He wants X. He comes in and asks for 106X, like the most ridiculous. We want Canada. We don't just want your trade. We want the whole darn country. Right. But what he does then is, if Canada agrees to, let's say instead of asking for X, if he wants X, he asks for 4X. Okay. If Canada agrees to 0.8X, they can say, well, he asked for 4, we gave him 0.8. Meanwhile, he really wanted X, he gets 0.8X, and we move on. I feel like this whole thing has been setting the plate. And let's come back to one thing. Trump, let me blow your mind here. Trump has been in office for 10 weeks. 10 weeks. Okay. So could it be another 4, 6, 8 weeks before he's done setting the plate on tariffs, before we get to the eventual negotiating, finalization? It could. So that's the biggest risk I think we have right now. Yeah, is that I think we'll get to a point where it's all clear, but that's going to be. It could be. I don't think that's actually going to happen for 6 to 8 weeks. I'm not sure it'll matter in the markets, because the markets will begin to fish out the fact that, okay, it was negotiating. Now we're starting to see some of the finalized deals happen, and I think that happens in the next 2 to 6 weeks, I guess.
Yeah. I can see that. In the more short term, in the swing trading time frame, I was watching this week to step one, see if we could dig out of that hole early Monday morning. We did that. And then step two, I'm wondering if we can get a little bit of follow through here, because I feel like, yes, we could get some chop. This might not be the bottom of this corrective move, but at the same time, it feels like everyone last week was piling on to playing this bear flag break through the lows. And now now it's kind of ripping in their face a little bit. I think we need a little bit more in order to really scare some people out of their short positions. But at the same time, I think this is a good start, at least for some positive momentum in the markets, because last week up until Wednesday was looking pretty good. It looked like we were getting some good bounces. A lot of good stuff was happening under the surface of the market. I saw some decent longs that I liked, and then things started falling apart Wednesday, Thursday, Friday. But,
Yeah, I mean, I read a piece that I'll go to my list that, and I apologize. We realize that there's actually 100 of you that are on the Maverick and top trades, so there'll be a little bit of overlap. But I got a lot of extra stuff for the Maverick people tomorrow. Interest rates are good. Inflation's about to post a month-over-month number that's going to be flat or barely up. It'll actually be the lowest year-over-year inflation number in 3 years. Berkshire Hathaway is at a high. Copper is at a high. I know people are going to take qualms with this. Gold's at a high, and gold's actually a risk asset. When gold goes up, it's because risk is on, not because it's off. Gold just doesn't go down when risk is off. I think it's just a process. So, my conviction, the thing I'm very, very confident of is at some point we're going to be back at that 50 and 100 day. Some point in the next 2 weeks to 8 weeks, we're going to be back at that 50 to 100 day and have another 5 to 10 rip from here. What happens at that point will be much more critical to me. But yeah, I mean, we held the low of yesterday. Breadth was actually good. I mean, yesterday I think there was 200, and funny enough, even on Thursday and Friday, breadth was good. Yeah. Like there were more names up in the S&P 500 than were down. So, I don't know, man. It's the corrections to really create a healthy, sustainable bull market are supposed to be really painful and really miserable. Yeah. And if they aren't, the longer you go without a correction that's really painful, the more painful the correction when it eventually happens is going to be. And I think that's exactly what's happened to us here.
Yeah. Yeah, that's a great point. Yeah, and hence the super low fear and greed number 2. We gotta twist the screws on people here. You mentioned breadth and how breadth wasn't that terrible. We had the bigger stocks; these mega caps have been just dragging the market down, especially late last week. We saw some big dumps in the big names, and I have the list of performance here of the drag 7. Microsoft, Amazon, Meta, and Google are 20% off their highs. Wow. Nvidia's 30%, and Tesla's been cut in half. Apple is the only one that's quote unquote surviving, and it's down just 15%. So we've seen some really big dips in these, and this is the best performer so far, Apple. But I mean, we go through these names, and I mean, if we just look collectively at the mags right here, I mean, we can see right here these the last 3 days of last week, Wednesday, Thursday, Friday. I mean, mags collectively were down 3.6%. A huge drop for that group right there.
Well, I shared again. I apologize to the awesome 100. I'm going to call them, which are the people that are on both calls. I was sharing some data with you that I'll share on the Maverick tomorrow. I was looking at earnings revisions for full year 2025 on a broad group of indices for Q1. So meaning January 1, the earnings number for the S&P 500 was X. Where does it sit March 31st? Now, just so everyone knows, historically, calendar Q1 sees negative earnings revisions. So it's very normal. Companies come out, they reset guidance after Q4. It's all part of the process. But the S&P 500, negative 1.8, okay, negative revision. The stock 600, the European index, negative 1.2, okay. The Mag 7, negative 0.2. So from an earnings perspective, the revisions and the growth, because it's still higher growth, are better at the Mag 7. And now the multiples at these companies, we're at the lowest premium that we've been to the S&P 500 since the bottom in October of 2022. And if you pull out Tesla, which has a crazy multiple, we're barely at a point or two premium. Google trades at a discount to the S&P 500 on a multiple basis. I just want that to sink in. Okay. Like that's just nuts to me.
Yeah.
This company has enough cash on the balance sheet. And by the way, it's growing 15% and beating numbers and positive revisions. But it gets to what my point was. We had 15 months of one-way action. All it did was go one way. It was relentless. Go back 6 months, because go back to July was really the peak of it. How many people said you don't need to buy anything else? You'll just own the Mag 7. It's driving the market, blah, blah, blah. And now that the Mag 7 are lagging and the 493 are actually outperforming, of the 11 sector groups in the S&P 500, 9 of the 11, or maybe it's 8 of the 11 are up on the year. The only 2 that are down are technology and consumer discretionary, which Tesla is the biggest member of. So everything in the market is actually now up, and they're down, and people think the world's going to end. It's just not how it works. It's just not how it works. So
looking at NVIDIA, which I think this is an interesting situation right here, because, and again, I'm not a top caller or a bottom caller. It's not my bag. But I see a lot of chatter out there right now about everybody wanting to call a big, big top in semiconductors. Fundamentally, and maybe this is a little squishy, but fundamentally to me, it feels a little early to be thinking about that. And maybe this is more of a shakeout type move, but I would be very surprised to see a big rounding top kind of confirmed to the downside here without something bigger happening to the overall market.
Well, I think to go to marrying fundamentals and technicals, it ain't going to happen in a straight line for NVIDIA for sure, especially now. Like, we're still, I don't know if you saw this Ghibli thing on ChatGPT. So I didn't know what Ghibli was. I don't know if how many people are here did too, but it's an anime studio in Japan. They did a couple really famous films. All the kids are into it. I knew the films. I'd actually seen the films. I forgot the name, which one it was, but they did this engine to turn us into anime. And, Sam Altman got up and said, our chips are melting because we had so many people. And I don't think he was making it up.
Right. Yeah.
So there, we had the call. NVIDIA's going to lose $1 trillion. NVIDIA's lost over $1 trillion. Our call was avoid NVIDIA and, diversify, get away from the Mag 7. Actually, and this is funny because for 6 months, we weren't saying the Mag 7 was bad. We just said, go elsewhere.
Yeah.
Now, I got to be honest, for a trade, I'm saying go to the Mag 7. Like, I think that's where the trade is. And so with NVIDIA, what I was going to say is NVIDIA, I can get down with NVIDIA's eventually a $70 or $50 stock. I really can. Yeah. Okay. But that's only going to happen after 9 months of earnings revisions. From here, I think we're a lot more likely to see 125, 130 than we are 80 in a straight line, because tops are a process. And so to your point, we're at the bottom, we're on the lower end of the scale of the process. But I don't know, with ChatGPT's chips, melting with that kind of demand, at least for now. Now, second half of the year, I think we got real concerns. But I actually like all the Mag 7 here, which is not something you hear me say. I even like Tesla because I think the sentiment's just so terrible. I don't know if did I say it on the call, maybe at Maverick last week. I'm going to go out and buy a Tesla. I'm going to buy a used Tesla. We need a second car. And I kind of I don't know, it's kind of nice. I drove my buddy's hybrid and it was nice to not have to buy the gas. Everyone I know who has a Tesla loves them. The secondary value of them has plummeted. And I'm just like, people love these cars. I'll buy one. This stock could be at 350 and still be in a confirmed downtrend. And it could literally be at 350 in like 3 days.
Yeah. You mentioned used Teslas. And I know you've been chatting about like potentially picking up a used Tesla. Charlie Bolello posted a chart of used Tesla prices, like just plummeting. The spite selling is real. So.
Oh, really? Oh,
yeah.
Dude, I'm gonna have to look up. Send me that chart when you find it. Like,
Yeah, definitely. It's funny because I think they've been like I don't want to say chopped in half, but it's been a pretty big decline over the past several months of the used prices of them.
Well, so what's interesting too, it's funny. Musk. It's going to be fascinating to see how this plays out.
Yeah,
he's a smart guy. It's not by accident. He dropped all the prices of the Teslas going into like the last 2 years to kind of like keep market share and build scale. And I mean, I got to be honest with you, the best positioned automaker in America from a tariff perspective is Tesla.
Yeah.
Like, I mean, you know, Ford and GM profits, I'm saying that kind of a worst case happens. Ford and GM profits go to zero. Yeah. You know, they're not going to do anything in EV. So yeah, it's cutting like a fox. I mean, the whole thing, and we're not gonna, this isn't a Musk, you know, a fan club here, but the whole thing that he did with X and XAI over the weekend on Friday, where XAI is buying it. Yeah. You know, the guy didn't get to where he is by being an idiot. He's a very strategic thinker. Doesn't mean he's perfect. And I kind of feel the same about Trump. Like he's a smart guy. Like he ultimately he figures it out. Yeah, I even think Tesla. I like the Mag 7 here across the board, and Goog blows my mind. Yeah, when Meta was back in 2022, pull up the chart of Meta. Whitney and I over at Empire were just like, this is crazy. Like, go back a little bit further. Pull up the 5-year. Whitney and I were just like, and it was literally, if you go, you can do it at the bottom there too.
Give you a weekly. There you go.
Okay. Yeah. We literally, we're just like, it had cash on the balance sheet. It was generating cash. Now, Facebook was trading at like 12 times earnings with like pull the cash out, and it was trading at like 8 times earnings. Yeah. And Whitney and I put together like a 5-part piece of why you should buy Meta. And it was literally right at the bottom there. And Goog reminds me of that. And at the time for Facebook, it was metaverse hate. Everyone was just hating on the metaverse.
Right.
And now I think Goog is getting some ChatGPT kind of hate, you know, where people are saying it's an existential moment for Goog, but I just don't believe it. The one big difference between Meta at the time and Goog today is Meta really did have huge negative earnings revisions, and Goog doesn't.
Yeah.
You know, so I guess one other thing here, and it was a super big message. I said this message 2 weeks ago, but I'm going to say it super strong today, and even more on the Maverick tomorrow. Every few years, you get a chance as a trader, and probably as an investor too, but definitely as a trader, to buy the highest quality companies out there at crazy oversold levels. We are there in the Mag 7. Now, does that mean they're going to new highs this year? I don't know. I'm not making that bet. What I am saying is I think you can buy these names, awesome companies, the best companies, under extreme like investor duress, and you can make 5, 10, 15, 20% on your money in weeks, you know, and you talk about margin of safety. I don't understand how Goog at 15.5 times next year's earnings does not have a very high margin of safety. That's by the way, that's the multiple. That's the long-term multiple of the S&P 500 for Google.
Yeah. Yeah. And back to what we were saying about Tesla before, there was a lot of self-driving chatter. And then I think Elon replied to one of CNBC's posts about it, because I think it was somebody from CNBC. It was Faber or someone who was riding in some sort of self-driving Tesla and talking about how it didn't touch the steering wheel for 100 miles. And Elon confirmed that in August, you know, we're going to see that roll out in certain locations. I know everybody who follows that stock has been very skeptical about the August rollout of the full self-driving stuff. I mean, maybe that is, you know, going to be a much more positive catalyst than people think it is, because you know how Tesla kind of has the tendency to promise big and then back off for a while or miss the timeline or whatever. Yeah. Maybe this is one of those situations where it hits the nail on the head and it becomes a huge catalyst for the stock. I think that would be pretty interesting, because
we're getting to the point. Yeah, we're getting to the point too where I talk. It's so hard for people to understand this. I talk about potential that builds up in stocks and the market because of sentiment. Yeah. Just the way that I'm saying that because of 15 months above the 200-day moving average, the S&P 500 was bound to get a nasty correction. Mm-hmm. If it wasn't tariffs, it would be AI something, or I don't know, there's a whole host of things, like the Russia thing. I don't know what it is, but stocks set up that way too. And I'll tell you, we've seen it over and over with Tesla. That you're just, and God forbid, this is actually what happened to Tesla prior to the election. They actually put up a quarter where they didn't see a negative revision, and the stock exploded. That was prior to the election. I don't know if people remember that. So, they're going to get a handle on it. I think any positive catalyst, and there's just so much negative sentiment. You could be at 350 and it's a terrible chart still, but this is the time to buy these companies. Instead of messing around with coin. I know I criticize these a lot, and I think they're doing okay. Instead of messing around with Rigetti, okay,
Yeah.
like why would you buy Rigetti? So Rigetti, which we've gone through before, I can buy Goog, who's the one that set off the quantum thing with their chip in the first place, for 15 times earnings with $100 billion of cash on the balance sheet, or I could buy Rigetti. Now, Rigetti will double in a speculative fervor. Goog won't. But this is just a really awesome time to be buying these highest quality stocks.
I will say about Rigetti, I am very surprised that it's not a $1 stock right now. The fact that it's still up here is pretty amazing.
It takes time. It takes time, I think, to get there. Is the issue. So let's move on. I feel like I'm mag-seving everyone to death, but I want to say something that's important. We normally don't talk about the Mag 7. Why? Because everyone was talking about the Mag 7. There wasn't anything interesting about the Mag 7. Yeah. It's just sort of like it's NVIDIA maybe, but everything else, it was just the same conversation. Now, I think, is the time to be talking about the Mag 7.
Yeah. Shifting gears to things that maybe folks are still bearish on too. We got a little Bitcoin rally this morning. It was looking pretty weak following the weekend there. It kind of drifted lower after a bad Friday because, you say gold's a risk asset earlier in the call. Bitcoin also part of the tech trade risk asset, I would say. And it wasn't looking too hot, and now it's starting to perk up here. Maybe something's brewing. I don't know. I still don't really love the chart here. I think this needs to chop along. But at the same time, it has not broken down. It really hasn't been that bad. A lot of the other coins look terrible, but Bitcoin's held up really well.
So interestingly, for Breaking Profits, which is my new front end where we just launched it, I think obviously Omega Well Circle people are getting it. Everyone else can subscribe. It's it's relatively inexpensive. It's longer term investing where I'm focusing on big news and all that. But the first issue is coming out later this week, and I was working on just we call 5 corners of the market, which is just taking stocks, bonds, commodities, crypto, and just kind of just do a very quick analysis and let the charts speak to you. I was actually amazed. Bitcoin is held in better relative to the moving averages than the stock indices.
Yeah.
Look at that. Like that's actually that's really adhering to the 200-day moving average.
Yep.
Versus if you pull up even the S&P 500, it's kind of had a more substantial break of it, and the Nasdaq even more so. The Russell, don't even get me started. So yeah, of the risk, look at that. And then pull up the Russell. I mean, yeah. So that one, this is the Russell, by the way, we're 50-day below the 200-day. But Bitcoin is the one that's held up the best, which I think it's surprising to folks. Surprised me.
I think it's interesting. And I would be more surprised if Bitcoin started ripping and it left the market behind and the market kept falling. I don't think that's going to happen. I don't know if you have any thoughts on that, but I think they're still too neck and neck. They still hold hands a little too much. I don't think we're going to see a big divergence in them.
I get back to anything can happen, I suppose, but rates, inflation, Berkshire. I mean, the Brazilian Bovespa is up 18% year to date. That's not a world where the U.S. stock market crashes. I'm just going to tell you, not once in 50 years have you had the Bovespa up 20% and the U.S. down 20. And I don't think I'm going to see it in my lifetime either. Okay.
Yeah.
So, I think you'll take advantage of it. What you do need to do, though, is you need to do swaps in your portfolio take the smaller, more speculative thing that you were getting involved in when the market was at its highs because you were taking on risk, and you might be down 10, 20, you might be down 50% in it. It doesn't matter. Sell it and go buy Google, go buy MagX, go buy, any number of really awesome companies that have come down. And this is the time to do that. And you only get these times, once every couple of years, maybe once a year, something like that. So, but I think Bitcoin I put on that list with with Berkshire. Pull up Berkshire. Berkshire. Yeah, Berkshire's group of assets. I mean, it's a financial company with an energy company. It's run very conservatively, and they got a lot of cash. But this is not a low risk. It's a candy company. It's a I just don't see how the market collapses with Berkshire here at its highs. And I'm just there's other stocks like Berkshire, but I mean we can even speak to the European stocks and all that. So yeah, I think there's some I don't see a crash from here. Right. And even if we do crash, I think we go up 5 to 10% first, and there's an awesome trading opportunity.
Yeah, definitely. And also, I think there's still a little bit of speculative juice in this market right now. There's a little
Newsmax
called Newsmax. Yep, you knew where I was going. You knew where I was going with that. I mean,
well,
we got two candles here, but yesterday, I mean, this thing debuts at 13 and closes at 80, and then gaps up here into the.
It's at 130 today. Holy cow.
Yeah. I mean,
well, so what I didn't realize, this just wasn't on my radar at all. I don't know. I follow a lot of stuff. Newsmax, it was actually like a self-administered IPO.
Oh, okay.
It was a crowd-financed public offering. So it was done by Digital Offering LLC, a leader in crowd-financed public offerings. So I think this was like, do you remember when Spotify, I don't have the details, I'm not digging to be, remember when Spotify went public, that they basically did like a crowd listing. So they didn't have underwriters. They basically kind of went out and built a market like via using technology. So yeah, I mean, speculation is not dead. And again, I don't know whether that's a good or bad thing, but pull up a couple other charts. We were talking about this, I think, yesterday. It's like Tuesday at 11:30, and it feels like it's like a week already. Pull up the chart of Hood.
Yeah.
Well, first off, that looks like the chart of Bitcoin as I look at it now. Pull up the chart of Palantir.
Yeah, I mean, one comment on Hood: 200 days down here in red, nowhere near it. Hasn't even reset all the way to it. So really hanging up there. PLTR
chart.
Same idea. Yeah.
So someone on the chat, I want to do a call out. Someone on the chat, and it's not quite this, but they basically said, Kareem said this correction was a Mag 7 correction mostly. That's absolutely correct. Okay. Yeah. I mean, and I'll give you some math. The Mag 7, I just did these numbers. The Mag 7 is down 20% this year. The Mag 7 makes up roughly 30% of the S&P 500. The S&P 500 is down 5. That means X Mag 7, the S&P 493 is up 1. So, I think what we're seeing is like the tape feels terrible. But here's the tricky part. It isn't just the Mag 7, it's everything that was attached to the Mag 7. It's Broadcom and power stocks and construction and like this whole AI hierarchy of like 30, 40 stocks that everyone owned because they tripled their money last year, have all gotten, cut tremendously. And so what I'm saying, I'm not even going out there and saying that the Mag 7 is going to lead or that the group of stocks is going to lead the market this year. I don't think that'll be the case. It might be. But what I am saying is as a trade, it is an awesome trade because no one wants to touch them with a 100-foot pole at this point. So maybe this will go down as the Trump tariff Mag 7 correction. And that's the other funny thing is if this is about tariffs, the least tariff exposed company I can think of is Google. I guess countries will retaliate against Google because it's American. But so we're being led down by AI stocks, which really have nothing to do with tariffs. That's where I'm saying that, to me, that's more evidence that uh, the tariff reasoning behind the market sell-off doesn't really hold up.
Yeah.
I think we had a pile of kindling of dry. I'm from Arizona. We get a lot of wildfires. We had a bunch of dry grass. Phoenix had 152 days without rain.
Yeah.
It's an all-time record. We had kindling there, and tariffs were the spark, but they're burning the AI fire. Is kind of what's happening here.
Yeah, I think that's fair. I think that's completely fair. And, like you said, like you only get these moments, every couple years where you can pinpoint these times where it's like, man, this is the time where I can load up on something like this and make a huge buy. And when a time when everybody else is running, in the wrong direction.
I think Goog is having its meta moment. And when I look back when we made that call on Meta in 2022, I can't tell you how many people we had just being like, you guys are idiots. You don't understand it. Like, the world's changed. Facebook, no one's using Facebook anymore. Yeah. And we were like, look, Instagram, WhatsApp, because they got those too,
Yeah. I remember how bad, I mean, sentiment for Meta was absolutely in the gutter. Like,
it's terrible.
Right around that name change and the cartoonish like metaverse stuff that everybody's like going all in the wrong direction was
but I'm gonna layer one more thing on this. Hold on though, this is very important. And we're kind of, guys, folks, we actually do we do a lot of thinking on the fly. So what I'm about to share with you is like a huge light bulb. What happened for the big tech stocks in 2022. So 2022 was really interesting. The market was down 20 on the S&P, 38 or 35 on the NASDAQ. The almost all stocks went down, all assets went down, right? Bonds went down, commodities went down, all of it. But we didn't have a recession, an economic recession, but we had a profits recession. But most of that profits recession was driven by companies that were beneficiaries of COVID, primarily the big tech stocks, right? Because when COVID happened, if you didn't lose your job, you spent all your time online and you're buying from Amazon, you're surfing Facebook ads and all this stuff. So we had very strong negative revisions in 2022 for the Mag 7 and technology as a whole. But a good part of that, especially for Meta, was, I don't know if you remember the numbers, but Zuckerberg was spending $20-30 billion a year into the metaverse.
Right.
So his earnings went down. So what happened in 2022, late 22, they kind of anniversaried that COVID, I call it the COVID hangover. Yeah. At the same time, he said, okay, I'm going to back off the metaverse a bit. And instead of spending 30, I'm going to spend 20. Which, by the way, all that money is all their AI stuff. That's why everyone's saying that Meta is so well positioned for AI. And then their earnings exploded. This is what I think is going to happen to Goog, Amazon, Meta, and Microsoft. Sorry, Goog, Microsoft most, and then Meta and Amazon next. I think they're going to back off on spending on data centers. We've already had these rumors with Microsoft. But when they do, you have to understand that means they have more cash and less impact on their P&L. When I build a giant data center that's meant to service capacity of 1,000 and I only have capacity of 10 on it, I'm subsidizing that cost. If I back off of building more of that, the earnings can explode. So this was one of my calls, and we're going to see, like right now, it's not exactly happening. My call at the beginning of the year was that NVIDIA was going to get hammered, and that those four were going to do great by year end because they would actually see positive earnings revisions and NVIDIA would see no positive earnings and maybe negative earnings revisions. I think we're still setting up for it because the Microsoft stuff fits in with, what, I don't know how many of y'all know, there's an analyst at Jefferies or TD Cowen, I forget, that's come out and said Microsoft stepped away from a couple data center, commitments that they had in Europe and the US. Interestingly enough, Meta stepped in to take the European ones and Google stepped in to take the US ones. But that's been the flurry down in some of the AI stocks. It happened in January, February. It happened a couple of weeks ago. But that's very positive for Microsoft. That's not a negative because their earnings can go much higher.
All right, I'm going to shift gears for a second before we start taking ticker requests here because I want to get your opinion on a very important non-market topic, and that is torpedo bats.
Torpedo bats.
So for those of you who don't know, and I don't know if I'm going to butcher this story or not, I have some of the facts, but the Yankees showed up with these strange-looking bowling pin bats that an MIT guy on their staff has developed, and they broke their single game home run record, and now other folks are starting to use them. I saw a clip this morning of a player on the Reds using them. Is this going to become a big deal and a big game changer for all of MLB, or are they just going to go and ban things immediately?
I don't want to get too wonky baseball wise, but just so everyone knows, with a bat, they regulate what kind of wood it can be made out of, how long it can be, and how much it weighs. They don't regulate how that weight is distributed, nor the density. That's the other thing. You can change the density, so you could have lower density. So what they figured out was, but then I'm gonna take the whole thing apart here in a second. What they figured out is there were guys that instead of hitting in the sweet spot of the bat were hitting it kind of in the middle. So they just took all the density of the wood and put it in the middle. These have been around for 8 years. They've been widely used in the major leagues. The only thing that's happened, and there are like 50 or 60 guys in the majors that use them. The only thing that's happened is the Yankees on the offseason decided to double down on it, and they actually put a bunch more resources into it and make a commitment to it. And it may work, but it's not illegal. And they've actually been around the major leagues for about like 5-6 years. Definitely guys use them in spring training, etc. But I'm a Yankees fan. So if we get a 20-game lead, out of it, feel bad for your Orioles, but.
Well, it's the first I've heard of it, and I know they're legal. I'm kind of curious as to if this becomes a big phenomenon. Is this going to be like a golf problem where they start to regulate the bats more than
but I'll say a couple things about that, and now we're just getting into sports talk. There have been a lot of complaints about pitching overwhelming the hitters. Everyone loves home runs.
Yeah.
And, it's not like they're using a different material or longer bats or heavier bats. So, if you're doing that, I say let it roll. Let's see some home run records. I'm down for it. And not just because that'll benefit the Yankees. I think it's good for baseball. But, it's the old story. And let's bring it back to trading and investing. Work smarter, not harder. It's like figure out something like, and the other thing is, don't just accept something the way it is because it's the way it's always been done. Things change, and also our knowledge changes. And I mean, I think I've always been real good at doing that. Like I trade things now and in ways that I didn't 20 or 30 years ago because I was open-minded to being like, okay, let me adapt this.
Yeah.
So, the Yankees are making $20 million off the raise for their Tampa facility. Maybe we'll start selling torpedo bats to the other teams too.
Yeah, maybe. It's funny too. And the last thing I'll say about it, I mean, baseball's been around for a really long time, since the late 1800s or so in its current form, and they're still finding ways to get these edges in the game. It keeps it interesting for sure. And definitely some trading parallels, some market parallels in there as well. All right. Let's see. We have 15 minutes or so right here. Is there anything here we've missed? We've talked about Bitcoin. Oh, wait. Before we get to charts, I wanted to talk about gold. Gold, the risk asset. Best quarter for gold, up almost 19% since 1986, according to Bespoke, and the best Q1 ever for the yellow rock. What do we make of that?
I'll say a couple things. When gold makes money, gold only makes money in risk periods. I said this before, in risk off periods, gold goes down, but doesn't go down as much as everything else. It outperforms tremendously. Gold's had a great chart for a good long time. I think gold's a very clear trade right now. Is you sell it when you're this far extended from the 50-day moving average, and you buy it when you're a lot closer to the 50-day moving average. And I think you can just own. I'm talking trading here. I'm not talking investing, but I think you can just whack-a-mole that trade until it stops working. The only caution I'll give, I will give this one caution. I talked about the S&P 500 being above the 200-day for 15 months. Gold has now been above the 200-day since October of 23.
Wow.
At some point, that doesn't mean gold doesn't go to 5,000, doesn't go to 10,000. I'm just saying that the way to trade this is these patterns. You sell them when they're super overbought, and you buy them when they're oversold. Now, mind you, listen to what I just said. It's very important. When they're super overbought, you take profits. You buy them when they're oversold. They don't have to be crazy oversold. And then you just whack-a-mole profit taking, over and over and over and over until the market tells you otherwise. And so, I love gold as a trading vehicle. And this is all without getting into the investing, because we're talking about trading. Would I buy gold here? No. I think we're where we were in October 30th and where we were in February 24th. And I think the last time you and I spoke about gold was, I said the exact same thing, because it was back in mid-February.
Yeah.
So love it. Take some profits. Be ready to buy it back closer to the 50-day.
Yeah, I mean, just technically super extended here, and I mean, what a run! Even in the closing days of the first quarter, there, just straight up, pretty incredible stuff. All right, well, let's move on and take some charts. I have a short list of some ones I've been keeping track of that you guys were asking about. So let me dive into some of those real quick. I had a question about.
And I'm answering baseball questions while you're doing that on the chat.
Oh, so you're talking baseball, and I'm going to talk charts. Somebody was asking.
No, I'm listening. I was waiting for you. I was waiting for you to load up.
Someone was asking about SoundHound. Yeah, I mean, this is one of those ones. I feel like it still needs more air to come out of it. I would like to see. I mean, if I was going to jump into this, and I don't know if this would be tops of my list for something I would look to jump into right now, but I'd want to see it back above like $9, or at least trying to come out of whatever this is.
And I'll say something. I'm gonna do this a lot because this is the right time to do it. SoundHound versus Palantir, Hood, or Google. Yeah. That's the trade-off you're making right now. When you buy SoundHound right here, you're not buying. Maybe you're buying both, but let's just say you're not buying Hood or Palantir, which are very speculative stocks, but that are much bigger, have much better stories. And you're not buying Google, which is just incredible, buy of the century kind of thing. And you're going to buy SoundHound for that? I don't know. Because I got to tell you, if we're wrong and we are in a bear market, I know which one's going to go down the most.
Yeah.
And it's going to be SoundHound. This is going to be down 50, 80, 90%. That ain't happening to Goog. And that isn't also happening. Palantir is going to be hard to say because it trades at 726 times, 2030 earnings. But so I just wouldn't do it here. You have so many better opportunities.
Yeah, I had some questions about that the other week. It wasn't about SoundHound, but it was a question about, like this trade appears to check all our boxes. Why aren't we taking this? Well, we can't take every trade on the table. We all have limited capital, and part of Enrique's job and part of my job is to, for our separate goals and timeframes, is to steer us into the best possible trades in any given market condition. So yes, there's going to be stuff that's breaking out when markets are breaking out that I'm not going to take because I feel like there's a better trade somewhere else. And I'm not always going to catch the best one, but I want to be in the position to catch those ones that can outperform everything else.
And I want to say something here because there are 100 people that do both this in the Maverick calls, but there's probably 500 to 700 people or whatever on here that aren't on the Maverick. One of the big messages I'm going to have tomorrow is right now is the time when you take losses on your lowest quality positions / biggest losers and reallocate to better stuff, and I'm going to use that Palantir, Hood, and Goog as examples. And that's key. And one of the most powerful things behind that is also just your psychology. And we all think we can beat it. I mean, I'm pretty darn good at it. You're pretty darn good at it, but I still get so. But moving something that's down 27% off your thingamajig, off your screen, and replacing it with something that's just as good, that's flat right now. Because when you rally from down 27 to up 50 to down 8 or 12, you're still going to be kind of bumped. But when you get your Goog in there and it replaced whatever that was, and you rally up 15, you're going to be pretty happy. But you want to put yourself in a winning mindset because it sits there. It's so damaging. So that sounds like kind of moving the decks on the Titanic or whatever. It's just kind of moving it optical. It's not. It's not. This is the time to make those swaps. Getting to SoundHound, I would sell SoundHound and buy one of these great high quality stocks that are out there on sale right now.
Yeah, that's excellent. That's a good way to put it all together. I had a couple from earlier that I wrote down that Michael gave me. One of them is Path. Looks like it's going down a lot. I don't like that. Not to be overly simplistic here. It is down here at its lows. It doesn't appear to downtrend to trendless. This isn't something I would really necessarily attempt to buy here. I don't know a lot about this company. But again, I think this is a situation where I think there's better trades out there than something like
Yeah, I mean, like I said, chart looks like death. I don't buy death. Like I know the company fairly well. Negative earnings revisions. Like we should be raising the bar, fundamental bar on our stocks right now, not lowering it. When risk is super on and we're at the highs, that's the time that we dial up the fundamental risk. Right now, we should be dialing it back because there's a chance. We still think we're in a bull market. There's a chance we now have begun the movement into a bear market. It's I went from 1 out of 10 to 1 out of 4, or 1 out of 3. And this, you do not want to own Path in that. I mean, SoundHound's much worse, but yeah, this would be another swap candidate.
Yeah, and I think the other chart that he had is going to look exactly the same because I pulled it up earlier. Yeah, same deal for me with something like this. Below a downward sloping 200-day.
Super cool company, by the way. I love Symbotic as a concept. I know this company like incredibly well. So how about we say this? We're not in a risk on environment, and we're not necessarily in a risk off environment, but we're in a risk maybe environment.
That's fair.
that is probably the most dangerous place to own these, because I'll tell you, what's happened to me in the past is I had things that I owned in risk on, and then I didn't cut them when I went to risk maybe, and I turned 20 or 30% losses into 70, and I had no one to blame but myself because there were other things to buy. So Symbotic, I love this story. Negative earnings revisions, terrible chart, a lot of controversy. You don't need it right now. So you can do better. You can buy a Tesla.
And you think about how people are going to react. I mean, like Enrique said, if we go from a risk maybe environment to a risk off environment, this is going to be one of the first names when people own it that they're going to dump. And so if this drops below 18, it's probably going to go to 15 or worse.
Yeah, I mean, Symbotic also, we won't go to the fundamental story, still trades at 100 times, 76 times this year's EBITDA and 33 times next year. So, if they achieve next year, because they've had negative earnings revisions, could it trade at half this value? Absolutely. Goog ain't going to trade at 7 times earnings. I'm confident on that. I mean, if Goog's trading at 7 times earnings, we all have a lot more problems. We need to be out like foraging for food and water.
No. The other one, MRVL. This looks like a round tripper. Really bad. I feel like this one comes up a lot. Really bad earnings reaction there, and then it's broke below those post earnings lows. I don't like it. I don't. Again, this is I'm not talking about fundamentals. I don't have anything fundamental to say about this company. I'm talking purely about technicals and what I want to be in right now. And like Enrique says, I'd rather be in a quality name that's attempting to bounce than a name like this that's dropping to new 7-8 month lows. So
yeah. I'm intrigued by the semiconductors. I don't think it's over at all. I think we definitely, and this one still has good positive earnings revisions. The challenge is it's a cyclical industry, and so you're going to have, when the downturn happens, you're still going to have positive revisions. I guess our message is right now you can do better. You can buy the best of the best at super oversold levels. Like why? Of the ones that we've talked about, the 3, Marvell's absolutely the winner. Positive earnings revisions. It's got more of a base at this $60 level. So those other ones I give the first one a 2, the next one a 3, this one I give a 5.5. And I'm giving Goog a 10.
I like that. I like we have a rating system now. Let's see here. Coin. I haven't looked at coin in a while. I mean, my preferred vehicle for crypto hype is definitely Robinhood at this point. I mean, I like it long term, short term, and everything in between. Uh, Coin, it's down here at the bottom of its range. It could very well bounce. I mean, if we see a big rip in Bitcoin here, like let's say Bitcoin gets up above 90, it might get some people excited, and coin might do one of these where you get one of these big rips in it, and it could get back up here into the 230s. Maybe you want to try to take something like that if we do get a rip like that. Maybe
I
not
think coin is
until it gets above 180 would I start to get excited, because then I think maybe we got a little situation where people got trapped down here below these
I,
lows of
I think coin
128.
is interesting, and I really like it in some ways as a leveraged Bitcoin play. It's the
Yeah.
second largest holder of Bitcoin on earth. And so even though most of that isn't their Bitcoin, their compensation and volumes are based on AUM. So I've actually been surprised how poorly Coin has done relative to Hood. I think Hood's a much cooler, better company for various reasons. I really like the speculation on Coin. So, the other thing too, and because I looked at this the other week, the revisions are great. They're through the roof. So now a little bit of that's backwards looking because it obviously has some the revisions look a little bit like the Bitcoin chart. So with Bitcoin having pulled back, but I like we're getting better and better, folks. Every single one of these, like so far we're moving up the ladder. I'll give this my 7, 6.57.
Whoa, nice. I guess the other one that Paul had was LG. What is LG? Or is that coin Let's Go? I'm not sure what we're talking about here. I don't know. Oh,
Nah,
this is a little gold stock. I don't know anything about this one. This
I
is
don't know.
illiquid. It
It's
looks
not
like to
going
me.
up.
Let's see. What else?
Uber. Everyone's asking about Uber.
Uber. Yeah, because we have an Uber trade on, and
Yeah.
it's stubbornly red so far today. So this is how I see Uber. I drew this line here because this is what I was looking at when we jumped in the trade right here in the mid 73s. We got the nice outperformance a couple weeks ago, and then last week hits, and we took a big dip on Friday, down almost 3%. Ended up green yesterday, and it's trying to push again right here. This is kind of my line in the sand right here. You can see where the 200-day, which is the red, is meeting up with this little resistance break line that I drew. And this isn't very scientific right here. I'm just looking for it to get out of this downtrend and start to move, and we got deflated a little bit. If it can bounce off of this and move, I'm happy with it. If it can't, then I'm just going to cut it right here. If we get below 70-ish, then the trade failed and it's off. What I do like about Uber is that it's been a sneaky outperformer. This chart looks a lot better than a lot of the other tech charts. It fared a lot better from the market highs here, February 18th, 19th. This is where the broad market topped right here, and it did not go down as much as a lot of the other stuff. So that's one of the reasons I really like this trade. And I like Uber long-term too, but I thought this was a good short-term opportunity.
I feel like Uber, whether it's this trade or one or two or three that are going to happen during this year, you're going to make a lot of money on Uber.
Yeah.
So, I mean, so it's a funny way to say that, Greg, because, with the options, you got to get the timing right too.
Yeah.
I think there's going to be a lot of opportunities to make money on Uber in 2025. So I really like this trade.
Yeah. And CD asked about Roblox. That's our other trade we have on right now. It did pop higher today on some news. I would like to see it push back toward the top of its range right there, because it did fade. But it has some sort of new ad partnership with Google. It was up pre-market, up into the 62s in pre-market, and then it sunk a little bit at the open. It's still green. I mean, it's still up almost 3%. That's fine.
This reminds me of the Hood and Palantir chart.
Yeah.
It's a nice looking chart.
Yeah, it's a really good looking chart. And you guys know, I mean, this blue line, right, is this blue horizontal line, this huge base, and the base retest here, retest and run. I mean, I think this thing, as long as the market doesn't fall apart here, I think we could absolutely rip. And
yeah.
Roblox could be back $75-$80 in a big time hurry. This is a nice
what I love
base breakout.
Too is like Hood and like Uber, there's a big story, fundamental story underneath it, and that does matter. that does matter because it's going to just attract more folks. So no, I like this one too.
Yeah. I'll do one more. Let's see. We got Dell. I haven't looked at Dell. What's Dell up to? Is it getting? Yeah.
Dell's got an AI hangover.
Yeah.
You
I think
know,
that's a great way to describe what's happening right now with a lot of these stocks. The old AI.
yeah.
So
Look,
maybe more time for this one. I don't think it's
pull up
top.
the 5 year, and it tells you more. You know, from early 23, it's up from 40 to 92, and then it went parabolic
Yeah.
in 24. I mean, let me go to earnings revisions. You know, earning revisions turn negative. Earnings revisions turn negative in let me just pull up the chart. I mean, I like this always does, folks. Like I look at a chart and I go, why is it doing that? I pull up the earnings revisions. Okay, full year earnings revisions have been flattish. I like it. I just think that there's, when you're buying semiconductors and server stocks right now, equipment guys, the market is discounting the end of the cycle or a big deceleration of the cycle, and I think it should. For a deceleration of the cycle, that's good for Google and Microsoft. It's going to act as a ceiling over the share prices of NVIDIA and Dell, in my opinion. And that's based on watching these stocks trade for 30 years.
Yeah, that's fair. All right, guys. Well, that will do it for today. It is 12 o'clock. Thanks for all your picker submissions. Love going through those charts with you guys. I loved hearing about all your thoughts on not only torpedo bats, but on the mags and everything, Enrique. That's some really good perspective about leaning more toward quality in this type of market. Quality at a discount that has a real chance to rip higher.
Well, and that's the biggest thing is like what we did in my hedge fund so well is like you're in a normal up market, and in an up market, you want to be putting on more risk to generate more return, and you should because they're lower volatility. But then in a down market, I can't tell you how good a move it is to sell a stock, you're a lower quality stock, you're down 30 or 40% in, and buy the same amount or more, take all that cash and put it into a goog. Like, you know, because if we're wrong, you're going to be in much better shape. And if we're right, maybe you don't make exactly as much, but your brain, you literally go take the stocks you're down, go take whatever you've down the most in, the 3 stocks, and go buy Goog. The other 2 I'm just making up. Goog, Microsoft. I'm going to pick 2 mag stocks though. Goog and Microsoft. We'll just do that. Take your 2 losers, buy Goog and Microsoft, walk around for the next week and see what your mental state is. You're gonna be like, ooh, wow, I feel pretty good, you know.
And
so it's like going from winter to spring.
We'll come back here next week and we'll review it. And I think we're gonna see some good results too. All right.
Yeah.
Good talking to you, Enrique, as always.
Absolutely.
All the Maverick people, I'm sure you're gonna hear more about this tomorrow at the call. They'll have some more to say about the mags and all that good stuff too. Take care.
Awesome. Thank you, everyone.